What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today I'm looking at Lofty's latest offering, which is a row home at in Baltimore, Maryland, that's being occupied as a midterm rental. Although right now they have an actual long-term stay there, but it was booked off Airbnb. But in general, their target market is people that work at Johns Hopkins Hospital looking for furnished properties. There's a whole bunch to like about this property. There's some stuff that I don't like. It's going to be quite a bit of different things to look at. So let's jump right in. First thing I always like to do, Baltimore, Maryland. That's the new market we haven't looked at on this channel. Let's jump right into the Wikipedia page. Just for a little background, I actually did work in Baltimore, Maryland a little bit when I worked in commercial real estate in Philadelphia, and I would make trips to Baltimore primarily to try to finance. Um, I think the only real deal that I worked on that got closed there in that time frame was a hotel refinance, and it is crazy to me that I can't think of the name of the hotel. But that was almost 20 years ago now, so I guess I'll give myself a pass. Anyway, it's an old city, lots of row homes or townhomes like this one that are have been dilapidated and rehabbed. Reminds me a lot of parts of Philly, parts of Camden, which in Camden, New Jersey, I worked in quite a bit. Um, you know, there's been, I feel like it's been being revitalized as long as I've been in real estate. There's always somebody pushing to do different projects. Cordish has an amazing one where they have what is it, their Baltimore Live, or they've got a couple of things, by the bay. So there's a lot of cool stuff that's happened there, but I think it's still very much struggling. If you look at population data trends, you can see that. I mean, this is terrifying to me, right? I have a really hard time wanting to invest somewhere where you just have a shrinking user base, right? And now he's doing midterm rentals, so it's targeting traveling people, so that might not show up in this so much. But from a supply and demand perspective, you have less and less people demanding housing units in this area, so that is somewhat terrifying. Although you do also have, from an investment perspective, right? And then you also have a lot of the homes going into disrepair. We'll see in a little bit. So, you do have maybe some of the supply side of the supply demand of housing going away as well. So I don't know, but I think this for me is very hard to overcome. But there's a lot of stuff to like about it, and I'll show you, some of those things. So there might be somebody who decides, what, this is the right answer for them. So let me jump into it. So first of all, this guy Mark, who's bringing it to the platform, he seems to be a really professional operator. As far as real estate goes, if you go to his LinkedIn page, he's got his Superior Real Estate Development Company. That's his company. He's got good details about the stuff that he's doing there. He had a long career before that, doing state and local government affairs at quite a few different places, which I think means, I think that's really helpful in real estate to have, just basically I would expect him to have good people skills, be able to interact with the city well, which when you're, renovating a lot of properties, I think that's important. Um, so, I think this person who, and, he's going to retain at least 10% of ownership of the property. Uh, that's the type of person I want to invest alongside with, right? Like somebody who's just actually a professional, does this for a living. This isn't just like they're trying to offload, or cash out of a property. Like some of the properties I could put on here, that's more what's going on. One of the things I think is interesting, you can see this just 5 minute walk from Johns Hopkins Hospital. We're gonna take a look at that in a few minutes because I think that this might be stretching it a bit, but I'll let you decide. They have a really nice Airbnb listing, six or 3 bedrooms, 3 baths, and only 6 guests. And I think that's really appropriate. A lot of people would, if you have, they try to put extra guests into homes like this, and because of how small the living space is, I think that's just not wise. So I like what they're doing there. Um, Here's more info about the seller, about his background. It's great. He does have 4.89, star reviews. That's his average review with 168 reviews. That's pretty solid. I mean, it's tough to keep a number that high, so I like that. Um, it's 80% roughly leveraged, right? It's got almost $200,000 in leverage on what we're going to see as a 250 valuation. So a lot of that stuff I'm pretty good with. You can see the rental yield is 20%. That is super strong, and this, but like we talked about, this is somewhat a byproduct of the way that the debt is handled, right? Because let's go to the finance or the financials tab real quick. You can see the way they look at it. It's really a 4.32 cap. The reason it's yielding so much is because Mark is responsible for the mortgage and he's making those payments, and that's outside of the cash flow. And that works really great early on to give you a good yield, but over time, as that loan gets paid down, you get diluted because all the principal payments towards the loan create additional ownership for him, right? And so that's how all these properties have really good yields coming to the platform, and are just by the very nature of the design, that yield will probably shrink over time. Although if the income from the property grows, I think I did some math on this, and I think it really, your net operating income only has to grow about 3% to counteract the dilution over time, on average, which is not too difficult. But normally when you invest in real estate, you're hoping to have a growing yield. Now, I guess on the flip side of that, you're starting off with a very high cash on cash yield initially, right? So we've talked about that model a lot. I'm not going to beat that to death, but so it is. Is I think this will do really well on the platform. I'm guessing a lot of people will be interested in buying it. But I'm much more concerned with the actual fundamentals of the property for the ones that I'm trying to buy and hold very long term, right? Because as you approach the maturity of the debt, your um, your return ends up approaching the cap rate, right? And so that's just keep that in mind. But so I wanted to show you a couple of other things. So along the line of the financials, this is one thing that I can just tell the guy's a professional. He's given us an income statement in exactly the way I would expect to see it as a real estate investor. Um, I know it's shocking that I make a big deal about that, but if you look through Lofty Properties, hardly any of them are doing this. I think this should be the standard, and if everybody switched to this, you'd get a lot more actual real estate investors on the platform, because this is what we're used to seeing, right? Um, you know, they have one of the things that I don't really like is when they just say Airbnb income. I think this is the net income from Airbnb, and so it is ignoring. Um, I guess you're not going to really have cleaning fees that go through the platform, because he's in a very it's a so this one, like I said, it has a very long term stay right now. I think um, it goes through 2026, but it was booked through Airbnb, and that's why this is basically a stable income. I think it just varies based on the number of days in the month. I'm actually not 100. I didn't do the math and figure that out, but I think that's what's happening here. There's a daily rate that's applied there. Um, the One of the things that worries me a little bit, I don't know, I didn't see a separate lease agreement. And I know when you have Airbnb tenants or Airbnb guests that become tenants because of the length of their stay, I would normally want to get a written lease in place as well if I were managing it. Um, I don't know I know you have pretty strong tenant rights in Maryland. Um, So yeah, I don't know. I have to go back and look in the documents and see if that's something that they did. I think there's a lot of people that don't do it. I think the type of professionals he's trying to attract, I think you have a little bit less problems there. One of the things that I want to pay really close attention to with a property like this is the utilities, because you have virtually no control over that expense, right, when the person's living there. And those bills can get racked up pretty high when you have all utilities included. If they end up putting a Bitcoin miner in there, um, all of a sudden your electric bill goes through the roof, and hopefully you have some way of controlling that. I actually don't know what Airbnb's terms of service look like regarding utility usage, but when we do long-term leases, that's something that I'd normally want to address if you are including, the utilities in the bill. Um, so decent NOI relative to, this is the 2024. So this is, wait a minute. What do we got going on here? I think that they are not really including everything. Let's see. Because why is that so different? I know I was looking at this before. Yeah, we had 16,000 here. So what are we missing on this one? Expenses, alarm, insurance, interest, legal and professional, inspection fees, legal, appliances, total appliances, utilities. I don't see property taxes. I could be missing it, but I don't see that. But that's a tiny number, so that doesn't seem like that's it. We saw insurance in there. Um, this is one thing that drives me crazy is it's always whenever we get these, uh, year-to-date financials from the co-owners, the sponsors of the properties, they almost never match up with a financial tab. And I know that they are grouping things differently, and I understand that, but it shouldn't be. And I mean, even their annual gross rents, um, it I should be able to tie, figure out how to get back to that number, and I very rarely can. Um, but in any case, that's one of the things I don't spend too much time um, worrying about that as long as the numbers seem, um, as long as they're believable to me, because I know that I care much more about what they're showing me here. It is. Let me just search 'cause I want to see. Is there really no tax listed here? Yeah, there's no taxes listed there, so that's weird, right? I don't know why you're not including that in your P&L. I mean, I know it's a real small number, right? That 335, but it's not nothing. Um, Maybe he wasn't paying in past years. Sometimes, though, you'll get an abatement or something. So I don't know. If I decide that I'm going to move forward on this one, that's something I would want to dig into a little bit more. Try to figure out like, okay, why is our top line revenue not really matching up? Although it's pretty close. I think I know the answer to that. Is that's Lofty basically annualizes 1 month when they do this. Um, but then where else are we not matching up? And again, maybe I think it's utilities, right? I think they might be. So let's see, 7,635. Let's see what we have for total utilities here. Um, yeah, 5,537, right? And so this is actually whole, their whole year 2024. Um, Lofty is basically just taking the January number or maybe the December number and annualizing it, probably the December number, because they're always like 1 month behind. And so let's look at that. Is that actually what they're doing? 636.28. 636.28. Uh, times 12. Yeah, that's exactly what they're doing, right? They're just annualizing last month's, and you can see like just by doing that sort of thing, you're really skew your numbers when you compare it to actual, trailing 12 numbers, right? Because in December, you're just going to have a higher certain bills. And although this water bill looks out of control compared to these other months, so there's probably a story there, right? And so I really don't like that they just annualize 1 month. I understand why they do it. I think they could figure something else out, and I hope they eventually do. But so anyway, I think you can back into getting to the right numbers and pretty much believing this yield. one of the things that I'm always doing, right, is I'm looking for third party confirmation on that top line revenue number. If I looked at it as a pure Airbnb, you've got 32.2 thousand, 32,200. I think I guess that maybe they can't use it as a short-term rental, and that's why they're going midterm. I don't 100% know that that's the case, but that's what I think. And so, you expect to make a little bit less as a midterm rental. Although, if you look at this is very close. I mean, we were looking at 28,000 before. And you can see most of them are townhouses. They're talking townhouses. They're talking about being close to the hospital. All those sorts of things. So I think the comparables when I looked at them seem pretty comparable. The other thing I want to do is look on Furnish Finder. I think when you're looking at midterm rentals, this is in some markets. This is going to be the place where you're going to see um, the more of these properties listed that are furnished but are meant to be longer than a couple of weeks. And when I looked on here, so we are, let's see, um, up here more, right on Chase. And I thought I had found one that was right there, but somewhere around here. Um, this appears to be a pretty similar property, 2,800. This one not too far away, fully furnished, 2,600. And so that seems to match up, right? And obviously you want to spend a little bit more time digging into those. That's what I'm doing there. And so what do we have actually per month? And this is like after the Airbnb fee, so that seems to match up pretty well with what they've got there. So I'm pretty happy about that. I think that I'm fairly convinced that that is an accurate income. And so one of the reasons I really want to be worried about it is, so we have a midterm rental in there that's put in there before this is brought onto the platform, and um, and it's through this year and into next year, and so it's really easy to be like, well, oh well, look at what they're paying, and let's base our price on that. But for example, if they put their cousin in there at a super inflated price, you want to know that that's the issue, right? Like you want to be able to look and say, wait a minute, is this a realistic number, or are they just paying a real high number rent? Having some straw man do that so that they can then sell it at a higher price. That's the sort of thing we're always trying to avoid. Um, One of the things I didn't do, and I usually do right away, is click through all the pictures. I didn't do it since I opened this. I did this earlier today. Um, I really love this aesthetic, right? When you have the exposed bricks, and for these older row homes, or I think it's the a really good look, and um, people tend to like it when you can do it, and it's actually good looking brick still. Um, they do tend to be pretty narrow. You can see that, and so that was one of the things I was looking. It looks like you still have plenty of living space. Um, I'm not too worried about that. Sorry about that. My screen recorder froze again. I have a million tabs open for this, as you can probably see, so my computer's just struggling. It's definitely time for a new one, even though this one's less than a year old. So sorry about that. So I was just saying, I like the look of the renovation. I think that the property itself looks good. They do provide an inspection. There's a lot of little things that are called out in the inspection. To me, I think part of it is whenever you renovate a real old home like this, it's just not going to be a new home. You're just going to have a lot of small things. A lot of things are, a lot of imperfections. Obviously, if you decide you're going to invest in this one, you want to look through that. Like always, do your own due diligence, right? Don't just watch this video and click buy. It's terrifying to me when I think about maybe somebody would do that. Hopefully I say that often enough to do your own due diligence on these. Um, but the one thing I want to point out that a lot of people might not be familiar with is that this has a flat roof. That is, very common with this type of property in this area. I used to have one in the row home I owned in New Jersey. I lived in one there. I feel like they're very different, right? It's not shingled, it's like tarred, or you might have a membrane or some, but they just require more maintenance, right? It's not like you put it on and you wait 20 or 30 years and replace it. I feel like we were having to, retar ours every so many, there's or shorter period of time, like 5 years or maybe even less. It depends a lot on the weather and there's different options with flat roofs, but it is a little bit more maintenance intensive. I'm sure that Mark understands what that's like because he owns a whole bunch of these. And that's one of the things, there's all these little things that you can be concerned about, but I always go back to thinking like, okay, who's the operator? Who's the one that's really, on the ground helping with these things? And so that's why I really like that it's somebody that it appears to be a real professional. See, has the, at least looking at their qualifications online, looks like they have the right type of experience to do well. But it is, I just want to mention that because we haven't seen that in another property I can think of. I'm going to start closing some of these tabs as we go through them. There was talking about the value. They did we got 250,000 is the appraised value. Um, I think it's pretty tough. So let me show you some of the third party sites. You had Zillow didn't even give you his estimate. Um, Redfin gave you a $73,800 estimate. And I'm going to show you why I think this is. Um, we got 224 on Realtor.com. This is the closest one we've seen, but still lower than the appraised value. And that's all the third party ones that I checked into. Uh, I should have mentioned this. They're bringing this here with an saying the asset price is 262,500, which on Lofty you're allowed to offer your property for over or up to 5% over the appraised value. So that's what they did here. This is the 250 times 1.05 gets you this number. I really don't like that they do that. It's because most of the people investing on here are looking at this yield and virtually nothing else. I think this is probably going to work for a lot of people because they're going to be like, "Hey, I'm getting that 20% yield. There's a guest in there for a pretty long period of time." If you think in months, then having a guest for over a year seems like a long time. But like thinking about this as a long-term investment, um, I don't like that I'm paying a premium. I don't like that when I look on third party sites, I can't even find something that really justifies it. And I think that this is what's going on here is, oh, well, let me show you this. So, Lofty posted this on Twitter, or X. They're like, hey, this is, one of our new ones. Our client renovated all of these, which I think this is, he did this whole neighborhood, which I think it's amazing that he's changing neighborhoods. Look, this is just one block away, and you see all these abandoned homes. Um, you know, I think it's great that he's doing it, and I think that that's what they're trying to highlight. But at the same time, I don't want to buy a brand new renovated home that's a block away from a whole street of abandoned properties. We are, normally you think you want to buy the worst house in the best neighborhood. Um, that's not what we have going on here. So I always think it's funny sometimes when Lofty highlights certain things. You just can like you could just tell a lot of times that they're just really not real estate guys, right? Like this is not a selling feature for this property whatsoever. I mean, it is for Mark the developer, this was probably a great deal. He probably bought these super cheap, and that's why Zillow can't figure out what the price is because okay, these ones are selling for 250 or 220 or whatever the number is, and the ones a street over that seem to be the same size are selling for, I mean, who knows? I mean, you might get these for 50,000 or something. And so that's why, one of them said 73,000 or whatever that was. But so this makes it hard to comp. Looking at a lot of the online data, obviously the appraiser had to look for sales and used sales that were, actual other similarly rehabbed properties. And you can see, one was right down the street, probably by the same guy who I don't know that for a fact. Um, Two were on Patterson Park, which is, pretty close by. So I feel pretty good about this appraisal, the 250. Um, but I don't feel good about paying, above it, right? Like paying above the appraised value doesn't, I just don't see a good reason to pay that premium. One of the arguments might be that, okay, well, it's furnished, right? And so are they charging us anything for that? Um, I don't know. I don't know what they're lumping into this closing cost because that's a pretty big closing cost number. Um, inspection and appraisal costs. It's got to be something else, right? That's more than just that. Um, oh, and the lofty fee, but yeah, even that, it's more than that. And I don't think that they usually put their fee in this. So I don't know. I think that we're paying a little bit too much for it from a value perspective. Maybe it's worth it if you really just are after this yield. But I think, yeah, that's all I really wanted to say about that. It is. I think it's super hard to comp because of that. And if you look at we talked about earlier that they said 5 minutes, 5 minute walk. When I plug it in here, it tells me it's 21 minutes. I do want to see if I can drag this little guy over here. I grabbed the wrong little thing. Um, I want to see if I can get a 5 minutes, right? But I don't think that I can. So, if you're on the other side of it, I'm just trying to get to this corner. There we go. And even if we do that, what are we? We are still 13 minutes walking. So, either he walks very fast or he's using, the same description for a lot of different properties. I think that's possible. But, just like always, I took a little walk on the street view, and what I did is actually looked on here and tried to start from the property and then just go, what that walk would look like in the morning if I were trying to walk to the hospital. And if I'm advertising that I can walk there, I want to be able to do that. Um, and it didn't look terrible. I'm not sure, and I think depending on how you go, it actually could be, pretty decent looking. Now let me go back, like I was talking about. But if we just take off and go the other way, we're already getting to abandoned properties, or just vacant properties. And now we're going a little bit far back in time, right? Like this image capture was 2020, so more of these might be rehabbed now. Um, but like we talked about, there's a declining population here, right? And so that's why you end up with all this empty housing stock. And so even if you rehab these, you might not get people that move into all of them, right? So it is. Uh, I don't love this. I don't love that you have like just such a nice property, a nicely renovated property in a part of town where you're so close to all these properties that are just significantly worse. Obviously there's this Mark and other people are making an effort to change the fabric of the neighborhood, and if they're successful, I think that bodes really well for the values long term. But if they hit a wall, if demand shakes off, and you keep adding supply, um, that's one thing that worries me and could really hurt the yield. So yeah, I mean, this just made me laugh that this is like they're talking about this as kind of, it's just not a selling feature for the property. It's not something that I would highlight, but the fact that the person's doing it is noteworthy, right? He rebuilt all these homes in the neighborhood. It's really making a difference, and so I get why they post it, but at the same time, it does not make me want to own that property. Let's see, just trying to close some. It's charging a very low property management fee, right? 5%, so that's pretty good. Um, and I think that that's not the goal, right? Like the goal is not to just like sort of make money off the management. So that was good to see. The spot crime map, this one really got me. One of the things when we use this site, I've used it a few times before, and I've mentioned, it every time you bring up any area, it's going to show a whole bunch of icons. But what you have to see is how long it took, how far back in time it had to go to generate that many. And this is terrifying because these are all on the same day, right? This is every single one of those happened on January 7th, which must just be the last date that they've uploaded data for. You had a shooting, you had, what is this one? You had assaults, you had a number of arrests, you had thefts, all very close to our subject property. Um, that's tough. I mean, it is in some areas you're just going to see, pretty dense crime. And if you really look at it, right here where the home is, you don't have it, right? Like it is uh in other spots, but definitely in some of the places where you're walking through. I don't know. I wouldn't be super comfortable if I were moving to this area and I pulled up this spot crime map. Um, it'd make me think twice. It is uh, something that you just have to think about when you're buying an investment property. Am I going to be able to attract a tenant to an area if they looked at something like this? And to be honest, I've looked at these for a long time. I can't think of the last time I saw where they had a full group of icons that were all in one day. Like when they all fill up in a week. I think the last mogul property that we looked at in Houston, I was a little worried by, and it was a week's worth of them in that area. So to be able to fill the map um, in a day is just kind of um, it makes me, really gives me pause on this one. So there's that. Let me see. I'm just trying to close some tabs out. Oh, and I just closed an important one. I looked at the flood data. No flood zone here. I didn't expect one, but I try to do the same thing on every single one. Um, and then that was, yeah, the one I just accidentally closed was the let's see, let's get this back up here. We're gonna do this address. This is how I like to do it. Zillow. These friends. Guess I can't type unless I talk. Um, so just looking at the home price trends in that zip code, we've seen this quite a bit where you have a little dip, and this actually looks pretty good because it's gone up a decent amount. Um, it doesn't look like the ones that we looked at in the Albany area or the Atlantic City one. Not quite so straight up, but it looks better than a lot of markets. So I think that that's fairly decent. I don't know how you maintain that long term with the population trends looking the way that they do, especially where there's so much housing stock that can be rehabilitated, except that the prices um, are pretty low. So, like, one of the things you always have to think about is replacement cost. And you can't necessarily go and build new properties here, but you can certainly take any one of those vacant properties and then just, turn it into a new property again, right? Give it a full rehab. And I think it's probably pretty tough to take some of those true shells and turn it into a nice livable property like we see for a whole lot less than what these homes are priced at. I don't know that for sure. I'm not in that market doing rehabs, but that's sort of my sense. Although you can see, these are median sales price, median list price. Well, that's quite a difference. Um, Median sale to list ratio though says one, so I don't know what's going on there. That's a little bit weird. That those are so far off, but then it says one. Um, yeah, I'm kind of thrown off by that. Sorry. So where was I? What was I saying? Uh, Yeah, so it looks like these are pretty low prices, right? So the 250, we're a decent amount above the median. I think that makes sense because I think that there's probably a lot of rundown properties that are baked into these numbers, and we have a fresh, new, renovated property. Um, so I don't know. So all of that on balance, what do I think, right? I don't like the declining population at all. I really like the experience and what the guy is doing here. Mark looks like he really knows what he's doing. He's tackling big projects in the area. I'm sure his basis in these. I would guess it's pretty good, right? If you're doing these in bulk, somebody I bet if you're doing 24 at a time, you're probably or even if you're doing it in smaller chunks, you're probably getting good prices on everything and also just on the properties altogether. So like, but that's great for him. It's not necessarily helping us, right? But having somebody who's got that sort of experience, I think is helpful. When we have maintenance items that come up, I'd feel pretty confident that he'd be able to handle that, at a reasonable price or no good ways to get things done. So that's good. Um, Home price trends look decent, but I really like the proximity to the hospital. I think that from the limited experience I had with midterm stays, the hospitals tend to be the biggest driver for that, right? I mean, that you hear quite a bit people talking about traveling nurses when they talk about midterm rentals, and I think that that's just the one that's become kind of popularized. But I think that there are a lot of people that there's people that will rent a property near a hospital because they came there for treatment. Maybe they live somewhere where there's not a great hospital. They have a family member that's staying in the hospital, and they rent a home nearby. That's something that I think happens quite a bit in properties like this. So I like that model. I don't like paying a premium. Obviously, the yield's decent, but again, like I don't like the end of the day cap rate, right? Which is what our yield, if we held this really long term, would turn into. I think for me, this is not going to be a buy today. It's going to be one that um, I'll definitely keep an eye on if there's some dips in this to where I'm not paying a premium. I probably will pick some of this up. I think that there's, if like I think even at 45 for me, it makes a lot of sense, right? Like this isn't one that I need it to be $25 for it to make sense, like a lot of the tokens. But I think at 50, I just feel like we're paying all the money. Um, I'm just not excited enough about it to pay 50, but I think, somewhere pretty close to that, right? I mean, I think, definitely 45 I'm a buyer, right? And we looked at that one yesterday that came out a few months ago and it was at 50, and then, a couple people sold yesterday at 40. If that happened with this one, definitely picking up tokens. Um, I don't expect there to be any like real dip though, because they have that guest in there long term. Hmm. Almost so this is one of those times where I think that I want him to succeed on here because he's got additional properties that that he'd probably bring on the platform. Um, I don't know if you can tell the whole reason I'm doing this is as much as I've talked a lot about my initial motivation, looking for ways, things to recommend to my clients that, where they can invest in some real estate before they're ready to do the size deals that, I normally help clients do. But I really think that this is going to be the future. I think that there's going to be a lot more demand for this for investors in the future, and also I think it's a great way for investors to raise capital. So I want to see Lofty win. I want to see Mogul win and Ground Floor. Like all of I'd like there to be 10 platforms like this that so I can get some good platform diversification, and I have so there's some um, competition between the two. So maybe our fees come down a little bit. We're not paying such high fees for purchases and sales. But overall, I want to see these platforms win. And so, for that reason, I'm rooting for every single one of these that comes on here. I'd like them to be a buy, but for me, like I said, this one is not a buy at this price. I just never feel good about paying a premium, even if, okay, so I've got a great yield, but if I had to liquidate, if something happens, if he's not the operator anymore, if that long-term or midterm tenant moves out and we have there's just everything has to work perfect to keep these high yields. And that's something that we've seen a lot of times on this property or on this platform. People are basically really trying to engineer the deals so that they can get right to that price, right? Like, I mean, you just see 20%, it seems to be the target yield for people bringing at least levered properties to the platform. And I just don't see that. We've seen that several times. And I think sometimes when it makes it attractive in the short run, right? But at the end of the day, I'm buying into a piece of the real estate, and I want to know what that residual value looks like. I want to know what the long-term return looks like, and it's really hard to do that with the shrinking, with the dilution that happens over time as the loan gets paid off. So I don't know. You can tell I struggle with the model every time I look at one of these because it's like, man, it's hard to pass up a 20% yield. But that's just, it's not a durable yield, right? It's it's a yield that in more likely than not will go down. Um, I think, especially when we look at all the factors we looked at today, it seems unlikely that a year from now that price is going to go up for what the midterm rental people are paying, because you're adding supply, right? And I don't see that we're really adding demand with the way the population's going. Maybe you are in that specific zip code. That'd be something, spend a little bit more time looking at if I were going to buy this. So I think at the moment I'm not, but I am gonna. It's definitely one that I'm going to pay attention to. Try to buy when it's a little bit cheaper, or if you bring some other ones to the platform, if it's not at the premium, or if there's something else a little bit different about it, I might buy a little bit of it. I really just have a hard time with markets that are with the shrinking population. It's something that it just fundamentally scares me. Um, Aside from that, the other things I wanted to mention today, yesterday I talked a little bit about the 52-week challenge, trying to maybe get an accountability group or talk to some other people, talk to each other and like try to buy one fraction of something every single week, to stay motivated. I was thinking maybe we would do a Zoom call, or maybe, I don't know. I actually got a few responses from people already about, being interested in doing something like that. And I'm curious what you'd like to do, right? Like, is it something that we just, exchange messages about it, or we do a weekly or maybe a monthly or maybe even just a quarterly Zoom call where a bunch of us get on there and we talk about what we bought, or, would you want to do it more often? Um, I don't know. I think it's an interesting idea. I think, like I talked. If you didn't watch yesterday's video, the main goal is to achieve, a truly diversified portfolio, buying smaller pieces more often of more different properties. And I think one of the ways to do that is to just commit to buying something every week, which is pretty achievable on these platforms if you're looking at especially if you look at ground floor where you can spend as little as $10 a week on something over there. Mobile, it'd be tough to do on Lofty. I think you could do it. I bought another token today. One of the properties I like, it had a $22 one just sitting out there, because sometimes the limit orders just have one or two cheap tokens. Um, in any case, I'm definitely open to more feedback about that. If you want to shoot me an email, I don't know if I should really tell people my email on here, but I'm going to do it anyway. It's joseph@birdy.com. So JOSEPH at BIRDY.com. I get tons of email on there. Most of it's spam. So if you put 52 weeks in the subject line, it'll help me. I'll start to filter for that. And just let me know, let me know what you're thinking. If you want to, if you'd want to actually all jump on a Zoom call or something similar and talk about what we're doing, what properties we bought, or if you just want to, exchange emails about it, or maybe people that are doing it, we can just figure out a way to post what you're doing. I don't know. Just a thought, trying to a way for us to, all stay motivated to do it, because I really think that the opportunity is here. Um, Across several platforms to put together a really great portfolio. Um, if you watch the video from yesterday, you'll completely understand what I'm talking about. So I'm going to leave it at that. Um, I still have one coming up where I'm going to talk about what's in it for the co-owners. Why is Mark bringing this to this property? He's paying for the debt, and we're getting a 20% return, right? Like, what's that all about? So I'm going to try to talk about that, right? What I think is going on there, why I think it is actually a good deal for some of the people bringing stuff on here, and what the motivation might be, and what I think maybe some of them are missing too. We'll see. I'm trying to get a few answers to questions from people that have done it, because obviously, maybe not obviously, but I haven't. Oh, I haven't done it yet. I don't know what happens when that happens. It goes to sleep because I haven't done anything, but it's recording me. It should know not to go to sleep. That's it, though. That's enough for today. Until next time, I'm going to keep making mistakes so that you don't have to.